Okay, Dornbusch download 185. Andrew and the brains of the operation here at Dornbush Partners, Michael.
Morning, Andrew.
Morning, Michael.
Thanks for that very kind introduction.
Could I have that $50 now?
Yeah.
And I shouldn't make those type of jokes because, you know, this Banking Royal Commission at the moment, it's not a happy little place. AMP under the spotlight this week. What's your take on what's going on there?
Oh, look, Andrew, I guess we knew that there'd be more issues to come to the table, but certainly AMP the last couple of days have disclosed, or it's unfolded that there's probably a bit bigger pool of misdemeanors, so to speak, at the very least. But yes, 20 plus issues with the Securities and Investments Commission, issues about investors not being able to get their money out, being held under trust by AMP, and all these sorts of things. Not good.
My favourite line is where you've got the AMP representative, I can't remember his name, sorry, where he says, we basically had shareholders' interests ahead of client interests. That was my favourite line, and I'll just leave it at that, but just simply to say that being family-owned or Toowoomba-owned gives me a great deal of comfort rather than working for, an organisation where, and I'm not picking on AMP, I'm just saying generally speaking, a lot of these bigger banks and financial institutions, they're under immense pressure at the moment.
Yeah, they are, Andrew, and certainly, I guess we probably knew it inherently, and it's been bubbling away for the years. But this sort of sales culture of a few of these bigger institutions, and again, without naming specific, groups, you go into your favourite bank, and they want to sell you this and cross sell you that, and put you up for this and put you out for that. So. A few of those wheels now looking like they're starting to fall off a bit. Banks going through a big restructure generally, aren't they? With now looking at hiving off insurance businesses and getting out of funds management and all of that.
Banks selling off Colonial, $5 billion worth a year. Mindful of time. Talking of banks, BOQ came out first bank off the profit reporting season rank. What are your thoughts?
Yeah, numbers didn't hit what market was expecting or hoping for, Andrew. Half-yearly profit was about $180 million, which was down a little bit on expectation. I think you were saying there before, dividend expectation was down about 10% on what it actually came out at. But probably of most concern, I suppose, with Bank of Queensland, those net interest margins really under some pressure, 1.97 currently. But certainly looking like they could be squeezed back into potentially the 1.8s, but certainly the low 1.9s, well below the 2% sort of magic number. So.
And I think part of that is because interest rates globally are rising, so because they're so reliant upon borrowing money offshore, that's been an impact. I understand the Reserve Bank notes came out a couple of days ago. What were they saying about interest rates domestically?
Yeah, nothing of major sort of consequence, I suppose, but probably certainly now the suggestion that interest rates have now bottomed. Expectation is that any movement will be northwards from the Reserve Bank, but certainly nothing still in the short term.
So it's a bit of a dual-edged thing, isn't it? If you've got a big debt, that's probably a bit of an amber flashing light. Make sure you start thinking about fixing rates and all that type of stuff. But for our long-suffering self-funded retirees that have wanted to get better rates of return on their cash and haven't been able to, there might now be, albeit a long way in the distance, a light at the end of the tunnel. We might actually finally start seeing interest rates coming back to relatively okay. I mean, we're a long way away from that, but it's the first positive sign. Lindsay's giving us the wind-up, so I think that's about it for now. Till next week.
Thank you.